All right, ladies and gentlemen, let's talk about CARs. All right, let's talk about CARs. Now, in organizational perspective, CARs are categorized as assets. When you go to the statement of financial position, motor vehicles or cars, they are categorized as assets, right? As assets. And this one is in organizational perspective, organizational level or perspective. Now, the reason why they are categorized as assets in organizational perspective, it's because motor vehicles in an organization, of course, are used primarily for the purpose of income generation. For example, transport and so on and so on. And that's why they are assets, even if there are some expenses that are going to go with the cars, but they are assets because they normally generate income or they are used in the operations of that particular organization, and those operations are for the purpose of income generation. Now, in individual perspective, let me just write here, cars in individual perspective, in individual level, we are going to categorize them as liabilities, because in most cases, people are going to access cars for the purpose of personal use, but not primarily for the purpose of income generation. And ladies and gentlemen, the purpose of this video is to give you 6 reasons why I'm going to categorize cars in this particular perspective or at individual level as a liability other than an asset, because in individual perspective or individual level, they are not used for income generation, not unless you have bought a car and you have said that this car is for income generation, or you are going to put it in an industry where it's going to give you some income at the end of the month, and so on and so on. But if it is for the personal use, then it's going to be a liability. That is just one of the reasons that a car might be a liability. But in this particular video, I'm going to give you 6 reasons why the car you are driving right now, is a liability and it's not an asset. Even if you are saying it's an asset, yes, could be an asset, but if you look at it in a different perspective or at a different angle, it is actually a liability and you don't know. But because it's giving you some comfortability and so on, but in financial perspective, it becomes a liability. And that's why I'm going to give you 6 reasons why it is a liability. And that's why, ladies and gentlemen, this is another reason that you should stay subscribed in this particular channel. And if you're seeing me for the first time, my name is John Mweri. I'm a professional accountant with Ex-Finop Accountancy and Insurance Consultancy. And my work is to come here with a pen and a whiteboard, and this is what we normally do. We normally talk about finances, investments, and so on, businesses, business ideas, and how to have a good financial journey or a good individual financial path. And therefore, ladies and gentlemen, without wasting time, I'm gonna go direct to the discussion of the day. And the discussion of the day is why a car is going to be a liability. And just like the old days, I normally have my notes here whenever I have a lot of things to discuss about, so that I may not forget the points that I'm supposed to give you. And I'm just going to my point number 1, why a car is actually a liability. The car you are driving right now, it's actually a liability. Number 1, I'm going to talk about depreciation. All right? Depreciation. Now, as you have heard of the word depreciation, in most cases it's used in accounting. We normally talk about depreciation, we talk about amortization, and so on. But there is a difference between a depreciation and amortization. And in my next videos, I'm going to give you the differences between depreciation and amortization. But let's talk about depreciation. Now, depreciation is the loss of value of an asset or due to wear and tear, right? It's loss of value of an asset due to wear and tear. For example, if you buy a car at 2 million Kenya shillings, now immediately you drive that car off from the car yard. If you've just bought it at the cost of 2 million Kenya shillings, the moment you drive it in less than 10 minutes, it depreciates in value. There is no way you are going to sell me that car at 2 million Kenya shillings. In most cases, you are going to sell that car even at 1.8, 1.7, 1.6 million Kenya shillings. And that's the kind of depreciation we are talking about. In most cases, it's not about the wear and tear. It is about the people's perspective of second-hand things, whereby this thing that you've already used this particular thing, so there is no way I'm going to buy that particular vehicle or item at the original price or the original cost. So depreciation is the loss of value of an asset as a result of wear and tear. Now, ladies and gentlemen, when it comes to the car that you are driving, remember you bought that car at 2 million, at 1.5 million, at 3 million, 5 million, 10 million, whichever value that you bought that particular car. But over the years, that car has depreciated in value. Because if you wanted to sell that car right now, you cannot be able to sell at the original cost. You are going to narrow down the cost. Probably if you bought at 2 million, you might find yourself selling it at 800,000. And that depreciation cost from 2 million to 800,000, that is 1.2 million, 1.2 million depreciation. This is what we call a loss. And you know, losses are liabilities, because you know, when you are reselling that particular item, you are not reselling it at a profit, you are reselling it at a loss, because you bought at 2 million and you are selling at 1.2 million, or you are selling at 800,000. Therefore, you have a loss of 1.2 million. That one is a depreciation, and that loss is actually because of depreciation of that particular item. The same thing with a phone. If you buy a phone at 50,000, when you resell that particular phone, you are actually going to sell it at 25,000, at 5,000 there. So there is that amount that has depreciated in value, and that is when we call a loss. And a loss in accounting, it is a liability. And that is the first reason why your car is going to be considered as a liability due to depreciation. That is the first reason your car is going to be considered as a liability, and it's due to depreciation. And that is something that you cannot do without. Of course, these things are always going to depreciate. The only thing that does not depreciate is land. Land does not depreciate. Even buildings depreciate, but the land that building is sitting on does not depreciate. All right. So, ladies and gentlemen, depreciation is capitalized as a liability in accounting, and your car, the one that you are driving right now, it is a liability because of depreciation. Now, the second reason why your car is a liability, let's talk about maintenance costs. Maintenance costs. All right? Maintenance costs. Now, ladies and gentlemen, when you're driving this particular car, in most cases, you are going to find yourself in garage trying to fix that car. Probably you have a problem with the brakes of the car. Probably you want to do just the normal service of oil and so on and so on. Probably you have the tires are worn out and you want to replace them with another tires. Probably something is wrong with engine, and those are what we call maintenance costs. All right, maintenance costs. Now, the fact that you are removing money from your pocket and giving that particular car, remember, something that is going to take money away from your pocket, it is a liability. Now, if that car is taking money away from your pocket and that money is maintenance cost, the tires you need to buy, the whatever you need to do to that particular car so that you can maintain it, it's a liability. It's taking money away from your pocket. All right. Now we have to agree, because I know people will put a debate on this, trying to defend, this giving, you are telling us not to buy cars. No, I have not said that you are not supposed to buy a car. I'm just explaining why a car is a liability, but it depends on how you handle it at your personal level. But now maintenance cost is actually a liability, because when you take that car to garage, when you take it for maintenance cost and so on and so on, the oiling and so on and so on, that one is taking money away from your pockets. And if it's not giving you back, actually, it's not for commercial purposes, it's just for personal use, then it is actually a liability. It's taking money away from your pocket and it's not giving you anything back. So, ladies and gentlemen, maintenance costs such as service of the car is a liability, and that's the second reason why your car, it is a liability. Now, ladies and gentlemen, going to my third reason, it's the operating costs. The operating costs. Operating cost. Now, there is a difference between maintenance costs and the operating costs. Now, when we talk about maintenance cost, we have talked about the service, whereby you change the oil of the car. Probably you need to change the tires because they are worn out. Probably you need to change the brakes, and so on and so on. Those are maintenance costs. Now, when it comes to operating costs, these are the normal expenses that car need. For example, fuel, fuel. For example, insurance, for example, parking fees, for example, parking fees, and other costs that may be associated with this particular car for you to have it. For example, the fuel, you cannot drive that car without fuel. Again, you are removing money from your pocket and fueling the car. Insurance, again, you have to face the government. There are rules and regulations in the constitution. So when you own the car, it has to be insured against third-party accidents and so on and so on. That one again is a liability, you see. Now, parking fees, whenever you drive that car to an urban center and so on, and you need to park it somewhere, you need to pay for parking fees. Again, that one is a liability because you are removing money from your pocket. Now, let's talk about car wash. I think car wash should be, I don't know whether it's going to be categorized as a maintenance cost or an operating cost, but anyway, whichever the case, it's also an expense that you need to take your car for washing and to clean up and so on for the purpose of maintaining. I think this one is supposed to be here. I think car wash is supposed to be washing here. Washing is supposed to be on maintenance cost, just to make sure that your car lasts longer. And you need to make sure that you have taken it to the car wash and so on and so on. So, ladies and gentlemen, again, operating costs, fuel, insurance, parking fees, and any other thing that I have forgotten, registration fees, and so on and so on. Those now, for example, if you go to big events, if you have a car, you normally pay for registration. What are you paying for? It's not actually registration. You are paying for the person who is going to make sure that the car that you have come with, it's going to be secured. Now you are paying for the security of that particular car. So actually, when you have a car, it makes even your life becomes expensive, because you are supposed to pay for your entrance fee. Again, you're supposed to pay for the parking fees of this car and probably registration of the car, so that it can be secured wherever it is. So those are the kind of operating costs that I'm talking about, and that's the reason why number 3 qualifies the car that you're using to be a liability. Again, I'm not saying that people should not buy cars. I'm just here to explain to you why a car is a liability. There are some people who normally see people driving very good cars, but remember, if you have not invested and you are not up to that kind of a lifestyle whereby you can actually own a car and be able to maintain it, just know there are some other costs, so many costs that are associated with owning a car. All right, do not just look at the initial cost of acquisition of that particular motor vehicle. No, look at other costs that you are going to incur immediately you buy that particular vehicle. Now, let's talk about number 4. Let's talk about the item number 4. Now, let's talk about financing. Now, this is where people go wrong. Financing. Now, ladies and gentlemen, when we talk about financing, it's when you go to a bank or a SACCO or any other financial organization or even employer and get a loan. You go to a car yard and purchase a vehicle. All right? Get a loan, you go to a car yard and purchase a vehicle. If it's not that, the organization purchases a vehicle for you, and probably you're going to pay some monthly installments for that particular car. For example, if you go and you are financed a car of, let's say, 3.5 million, and you are supposed to pay this amount for approximately 10 years, or even 5 years. Now, You see, that monthly installment that you are paying each and every month, you are removing money from your pocket and giving them to the bank because you have been financed. Now you have taken a car on a loan basis and it's not for investment purposes, it's for personal use. Then it qualifies to be a liability. Again, you have just said, apart from what we have talked about here, remember, now just imagine your car is depreciating. Number two, you are paying for maintenance costs, the car washing and so on and so on, the service. Now you have the operating cost, fuel, insurance, parking fees, and any other costs associated with operating cost. Again, to make the matter worse, that car you did not buy it cash. It was financed by a financial institution, and therefore you are paying monthly installments of that particular car. Now, the worst case scenario is where the car depreciates faster than the time it takes you to pay back the loan. For example, if you're paying the loan for 10 years and then the car depreciates faster than 10 years, now you are left paying a loan of an asset that has already depreciated in value. And if you decide to pay that particular, you might even sell it. If you decide to resell that particular car, you cannot even sell it because actually it belongs to the bank. It's not fully yours. But if you value the car, if you value it, its values even less than 3.5 million, probably 1.2 million because of the level of depreciation. For example, if you go for a very poor model of the car and the one that depreciates very fast and so on and so on. So I'm not an expert in cars, by the way, but I normally hear that if you want to obtain a car financing, you better go for Toyota and so on and the Japanese cars. But anyway, I don't know. I'm not an expert in that area. But my problem is here. Why should you get financing a car without even looking at other costs that you are going to incur associated with that particular car? It's going to raise the expenses of your. Now, any expense associated with the car that you are driving, it is an expense. And an expense, it's a liability. So, ladies and gentlemen, the monthly installment that you have introduced in your life, it's a liability. That amount that you are paying to the bank for the car that you are driving is a liability. This is why I say that instead of building your asset column, you're building your liability column. Now, look at all this. All this is building a liability column. This one is liabilities, 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 and liabilities. But you know, people want to live a good life anyway. Now, I've not finished my points. Now, that was financing. Obtaining a car through bank or loans and so on and so on. Let me go to my point number 5, underutilization. This one is very underutilization. Now, when you talk about underutilization, it's whereby actually leave alone whereby you access that particular vehicle for personal use. This is where now you access that particular vehicle. It's not being used at all. It's not even being used for personal use. It's underutilized. It's just there. It's an idle asset. It just doesn't help you in any way. All right. So that is underutilization. And when you're not utilizing that particular asset, it is a liability. Why should you be having it? Because number one, you are paying for insurance. It cannot even give you the pleasure that you need. Why in the first place, why did you buy that particular vehicle? You should sell it to whoever you are going to sell so that it can be utilized somewhere else. Or probably you can put it into work or give to Uber people so that they can utilize the car and probably give you something at the end of the month. So underutilization it's a serious thing and should be capitalized as a liability, because if you have an asset, not even a car, any other asset that is supposed to be generating some income, and it's not, and it's just lying idle or it's sleeping, we call them sleeping assets, that one is a liability. All right. So ladies and gentlemen, underutilization of a vehicle or a car that you own, it's a liability. And that is the 5th reason why the car that you're driving right now, or if it's parked somewhere in the home or it's not being used for any other purpose, it is a liability. And my last reason, it's a lost opportunity. opportunity. All right. Now, when you talk about lost opportunity, is whereby you bought that particular vehicle for personal use. Now, remember, we have talked about point 1 to point number 5, where we talked about depreciation, maintenance cost, operating costs, financing, underutilization, and so on and so on. Now, when we talk about lost opportunity, is whereby that money that you used to acquire, for example, if you bought a car worth 2 million on cash basis, you paid cash to buy that particular vehicle, you could have used, now you bought that particular vehicle for personal use. Yes, you normally drive yourself everywhere you want. It's a very good life to live. Yes, I don't dispute that. But again, your car is depreciating. Your car is incurring a lot of maintenance costs. Your car has operating costs, the fuel, insurance, parking fees, and so on and so on. Let's not talk about financing, because we have said that you obtained this car on cash basis, but there is underutilization of car. If your car does not you doesn't utilize it so much. All right. Now, lots of opportunities whereby you could have used that particular amount of money, the 2 million, to invest it somewhere. For example, you could have put that money in a money market fund account, and it can even generate some passive income for you. You could have bought some shares of a company and you could enjoy dividends at the end of the year. Or any other investment, you could have done some biological assets investment. You could have bought some biological assets like sheep, cows, or do dairy farming, or you could have done the farming itself and actually invest somewhere where you're going to get some returns at the end of the investment period. If at all you did not purchase a car for investment purposes. But remember, if you took that 2 million and purchased a car for investment purposes, now that is another case scenario, because here we are talking about someone who purchased a car for personal use, and we are saying it's a liability. Now, I am not saying someone should not confuse me or put words into my mouth. I'm not saying that people should not buy cars. No. I'm saying that whenever you decide to buy a car just for personal use, just know you are buying a liability. It's not going to be an asset in any way. Not unless, number one, you are a very busy person, and that car of yours, it's going to save you a lot of time to maneuver from one place to the other than compared to public means of transport, whereby if you rely on public means of transport, you are most likely to waste a lot of time, and you could mess things somewhere, and therefore you are taking this car as an asset in such a scenario whereby, like, if you are using it to leverage time, or you are using it to save on time because you are a very busy person. But this person who doesn't even need the car, or you are not even busy, or even the public means of transport are just okay for you, yeah, that one is where we normally say that that car is a liability. But you remember, it's not a must that the car generates some income for you for it to be an asset. It could be saving you a lot of time, whereby if you relied on transport, on public means of transport, you could waste a lot of time and probably mess things up somewhere. For example, if you are CEO of a company, you are a very big person, you know, something like that. Now, that is when we can say that car is an asset, because it is saving you time, and when it saves you time, it saves you a lot of money and costs, and so on and so on. So, ladies and gentlemen, those are 6 reasons why your car, the car you're driving right now, I'm talking to you, it's a liability: depreciation, maintenance cost, operating cost, financing, underutilization, loss of opportunity. Now, the reason is, the question is, how can you convert that car to be an asset? Number one, if it's saving you time, leverage on time. All right, that one we have discussed. Number two, you can put it to an organization where it's going to make you some money. Number three, if you're buying a car, try to buy a commercial vehicle. All right, if you're buying a car, try to buy a commercial vehicle. For example, a matatu, or those matatus that are used to carry people from one place to the other. You can buy a lorry, right, for business purposes, and so on and so on. But if you have invested, then you can just buy the liability that you need, but just know whenever you buy it, it's a liability. You know, I was very, just the other day I saw a very rich person, but the guy was driving a very small car, which costs, if you calculate the cost of that particular car, I don't know why investors are going to be, you know, especially Kikuyu investors, they are not going to buy big cars. In most cases, you'll see those millionaires in Probox. You know, a Probox is a Japanese car, and it's a Toyota, and it's going to be having some, the cost, the maintenance cost is not very high, the fuel consumption is not very high, but those people have a lot of money to own V8s and those big cars and Range Rovers, but they opt for the small cars. Ask yourself why. These are calculations. Now, you could own a car that actually is not going to cost you a lot of money to, for depreciation, maintenance, operating costs, and so on and so on. All right. So, ladies and gentlemen, I hope this video has probably given you some financial knowledge when it comes to these particular things. All right. So thank you so much for listening to me. Again, this is another reason that you should stay subscribed in this particular channel. This is what we normally talk about. All right. So thank you so much. My name is Sir John Mweri, professional accountant with Xfinop Accountancy and Insurance Consultancy. Now, if you want to reach out to me, my contact is always on the description. Right. So don't forget to subscribe, share this video to another person, and put a comment on the comment section. And remember, put on the notification bell so that anytime I upload a video, you're the first person to get that particular video. That was my time. See you on the next.